A not-so-glamorous company has returned 5,000% in the past 2 decades. This incredible growth is in a strong industry and likely to continue. In this video, I'm going to explain everything you need to know to make the most of this opportunity. Before we go any further, make sure you give this video a like and subscribe to stay up to date on business, investing, and personal finance. Now the industry might be surprising, and it's not glamorous. Our stock today is in waste management. Although it's not the fanciest industry, it's made some astounding returns over the past 21 years. In this graph from DataStream, you can see the comparison of an index performance of North America's 3 biggest waste management companies versus the S&P 500. This graph was created with equal weight to the 3 companies: Waste Connections, Waste Management, and Republic Services. You can see that the S&P 500 returned nearly 400%, whereas the waste management industry returned an incredible 1,100%. So, now we know the industry has shown great strength. Let's dive into the stock itself. The stock we will be looking at today is Waste Connections, Inc., or WCN. If you'd invested $1,000 in Waste Connections 25 years ago, your stock would currently be worth $50,000. This $36 billion company is the 3rd biggest, but arguably the best-looking company in the business of providing waste collection, transfer, disposal, and recycling services to customers in North America. Waste Connections, along with its 3 biggest competitors, control 56% of the U.S. landfill industry volumes and 45% of solid waste collection market share. On top of the strong industry it operates in, WCN also has a strategy that's made it one of the most profitable players. Let's take a look at 5 things that make it the strongest player. Firstly, WCN is a major player in a consolidating industry. Since the waste industry compete on price, having scale is a good thing. It helps to drive costs down. This chart from Waste Business Journal shows a market share breakdown in billions by service and company type and shows how the market is split between activities and participants. In the biggest segment, which is collection in blue, about 1/3 of the market is still run by private companies. However, I would assume that WCN has its eye on those companies as possible acquisitions. As the 3rd biggest player and armed with a healthy balance sheet, it's in a prime position to continue growing through acquisitions. Thankfully, it won't have to fend off any new competitors either. The waste management industry is highly regulated and capital intensive, so it doesn't get many new companies. Secondly, the company has a great acquisition strategy. WCN has a history of making acquisitions of smaller competitors, then integrating them into their own operations to create greater value and cost savings. Since 2006, the company has spent the majority of its cash on acquisitions, which has massively paid off, driving up margins over time. Third, it's got high pricing power because of its niche focus. The waste management industry forces firms to compete on pricing, and its returns are the lowest in more populated cities. However, WCN strategically chooses to operate predominantly in secondary and rural markets where route density is lower. This means it's less profitable on a per-ton basis, but customer turnover is less, giving the business higher pricing power. Reason 4, WCN has long-term contracts that allow for inflation pass-through. 40% of Waste Connections' business is franchise exposure, where the company serves as the exclusive provider of collection services in a certain region. Many of its franchises contracts are long-term, some lasting up to 15 years, with prices typically tied to local consumer price indexes. What this means is the company can pass along the costs of rising inflation to the customers. This means even when volumes slow down, WCN is often still able to grow faster than inflation. And finally, our 5th reason is the company is run by great people. The current CEO is also its founder. Ronald J. Mittelstadt stepped down in 2019 but was recently reappointed to the top job. He personally oversaw the company's growth from its roots to the multi-billion-dollar company it is today and implemented all the necessary strategic steps it needed to get there. Operationally, the waste management business is a local one, and WCN's decentralized structure allows decision-making to be closer to the customer's trash bins. This is important, as it allows the company to react more quickly to local competition and hit its local targets. So, how does this impact Waste Connections' bottom line? Waste Connections' market position, long-term contracts, and high pricing power mean it can command and sustain industry-leading margins. The company is in such a strong position that it consistently delivers margins of over 30% before interest, taxes, depreciation, and paying off debt. Even during the financial crash in 2008 and 9, it still delivered. And the company expects margin growth again this year, despite the runaway inflation we currently have. Further, WCN has one of the highest cash conversion ratios in the industry. This ratio measures how much of a company's earnings is converted to cash and provides an indication as to the earnings quality of the firm. The higher the ratio, the better the earnings quality. So, This stock looks near perfect at the moment. It's a strong company in a resilient industry that isn't impacted by inflation. However, no company is completely perfect, so what could go wrong? The waste industry is still maturing, and as consolidation increases, the industry will only get more interesting. As we know, Waste Connections has made 5,000% returns over the past 2 decades, and there's no reason to believe returns couldn't continue compounding as the industry matures. Longer term, environmental, social, and governance factors may add another attractive aspect to investing in waste companies. After all, the sector fits with 4 of the 17 UN development goals. Those being good health and well-being, clean water and sanitation, sustainable cities and communities, and climate action. One thing to bear in mind, higher interest rates could slow the pace of any acquisitions or mergers that WCN might attempt. Now we've covered everything. I believe waste management is definitely an attractive investment. If you're also considering investing in the industry, you can invest in Waste Connections or any of the other big firms directly. Or to take a more balanced approach, you could invest via an ETF, such as the VANIC Environmental Services ETF, ticker EVX. Just bear in mind that with this ETF, the 3 largest waste management companies have a weight of only 31% in the fund. Just to recap, Waste Connections is a $36 billion company and one of the biggest players in the unglamorous industry of waste management. They provide waste collection, transfer, disposal, and recycling services to customers across North America. The company has made 5,000% returns over the past 2 decades, and some of its peers in the waste industry have done similarly well. Continued industry consolidation is key to both the company's and industry's continued and compounding returns. Thank you for watching to the end. If you missed any of my previous videos, click on screen to catch up. Make sure to give this video a like and subscribe so you don't miss any investing opportunities.